Welcome to the weekly market recap with Sampath Securities. Let's take a look at some of the latest developments in the Sri Lankan economy and financial markets. Sri Lanka's manufacturing and services sectors continue to expand in June 2026, according to the latest Purchasing Managers Index released by the Central Bank of Sri Lanka. The manufacturing PMI recorded an index value of 53 in June, indicating continued growth in manufacturing activity. However, this was lower than the index value of 56.6 recorded in May, reflecting a slower pace of expansion. According to the CBSL, new orders remained broadly unchanged from May, while production continued to increase, supported mainly by the food and beverages sector. Employment remained largely stable during the month. However, many manufacturers reported continued shortages of skilled workers and rising labor costs as key challenges. The Stock of Purchasers Index increased further in June, reflecting efforts by manufacturers to build inventories amid a volatile supply environment. Meanwhile, suppliers' delivery times continued to lengthen during the month. Despite these challenges, the CBSL said manufacturers remain optimistic about future business activity, although confidence has moderated due to the challenging environment created by the unrest in the Middle East. Meanwhile, the services PMI increased to 58.5 in June from 56.9 in May, indicating strong expansion in the services sector. According to the CBSL, business activity improved across several sectors led by financial services, professional services and the insurance sector. The new businesses index increased to 62.5 in June from 58 in May, mainly driven by growth in the financial services sector. Employment in the services sector also expanded, with the employment index rising to 54 in June from 49.4 in May as many businesses increased recruitment. The backlogs of work index remained stable during June, reaching the neutral level. Looking ahead, the CBSL said business expectations for the next 3 months remain positive. The report noted that anticipated economic improvements and high tourist arrivals, supported in part by the upcoming Kandy Esala Perahera season, are expected to support further growth. However, the CBSL cautioned that broader global uncertainties continue to pose risks to the outlook. Government revenue and grants recorded strong growth during the first 5 months of 2026, while private sector credit and broad money continue to expand, according to the latest weekly economic indicators report released by the Central Bank of Sri Lanka. Government revenue and grants increased by 30.6% to 2,536.9 billion rupees during the January to May period, compared to 1,942.4 billion rupees recorded during the corresponding period of 2025. According to the report, the government recorded a net repayment of 197.3 billion rupees in domestic financing during the first 5 months of the year. Foreign financing also recorded a marginal net repayment of 0.1 billion rupees. In the monetary sector, the weekly average weighted prime lending rate declined by 15 basis points to 10.47% for the week ending 10th July. Meanwhile, the average weighted call money rate eased to 9.01%, broad money or M2 expanded by 12% year-on-year in May. Outstanding credit to the private sector increased by 238.2 billion rupees, recording a year-on-year growth of 27.8%. The report also noted that total market liquidity remained in surplus at 116.72 billion rupees. In the external sector, the Sri Lankan rupee had depreciated by 7.9% against the US dollar on a year-to-date basis as of 10th July. Tourism earnings amounted to $151.1 million in June, compared to $155.7 million recorded in May. Workers' remittances also declined to $695 million in June, compared to $847 million in May. Gross official reserves were provisionally estimated at $6.45 billion at the end of June, including proceeds from the People's Bank of China swap arrangement. Meanwhile, the real sector continued to show positive momentum. The index of industrial production increased by 1.6% year-on-year in May, supported by high production of non-metallic mineral products and wearing apparel. The report also noted that crude oil prices increased during the week ending 10th July amid renewed concerns over global supply conditions. Sri Lanka's workers' remittances continued their strong performance during the first half of 2026, recording the highest first-half inflows on record according to the latest data released by the Central Bank of Sri Lanka. Workers' remittances amounted to $695 million in June, representing a 9.3% increase compared to June 2025. However, compared to May 2026, remittance inflows declined by 18%, making June the lowest monthly inflow recorded so far this year. Despite the monthly decline, cumulative remittances during the January to June period exceeded $4.6 billion. This represents a year-on-year increase of 23.2% and marks the strongest first-half performance in the country's history. According to the report, workers' remittances continue to be Sri Lanka's largest single source of foreign exchange, providing vital support to official reserves and overall macroeconomic stability. The report noted that the strong performance follows a record year in 2025 when total remittances reached $8.07 billion, the highest annual inflow ever recorded. That figure exceeded the previous record of $7.24 billion achieved in 2016. According to the Central Bank of Sri Lanka, remittance inflows have continued to recover strongly since the decline experienced during the 2022 economic crisis. The recovery began in 2023 when remittances increased sharply to $5.96 billion. Growth continued in 2024 with inflows rising to $6.57 billion, supported by the increased overseas employment. Although overseas departures eased slightly in 2025, remittance inflows continue to increase, indicating high average transfers by Sri Lankan workers employed abroad. The report also noted that workers' remittances have remained a key pillar of Sri Lanka's economy for many years, providing a stable and reliable source of foreign exchange. Sampath Bank plc opened subscriptions on 17 July for a Basel III compliant Tier 2 green bond issue with plans to raise up to 10 billion rupees. According to a Colombo Stock Exchange circular, approval in principle has been granted to the list bank's Basel III compliant Tier 2 rated, unsecured, subordinated redeemable green bonds with a non-viability conversion feature. The initial issue comprises up to 70 million bonds with a face value of 100 rupees each. Through this offering, the bank aims to raise an initial 7 billion rupees. In the event of oversubscription, Sampath Bank has the option to issue a further 30 million bonds, increasing the total fundraising to a maximum of 10 billion rupees. Investors will have the option of two fixed-rate instruments. The 5-year bond offers an annual interest rate of 13%, while the 7-year bond carries an annual interest rate of 13.25%. Interest on both bond categories will be paid annually. According to the report, the funds raised through the green bond issue will be used to finance eligible environmentally sustainable projects. The issue will also strengthen the bank's Tier 2 capital position in line with Basel III regulatory requirements. Sri Lanka's cabinet has approved the implementation of a new national livestock policy, replacing the country's 2-decade-old policy framework. According to the report, the new policy is aimed at strengthening the livestock sector through private sector-led development and market-oriented competitive production. The policy has been introduced to address the challenges facing food security and the livestock sector following social and economic changes at both the global and domestic levels. It outlines several key priorities to support the long-term growth of the livestock industry and reflects the structural changes that have taken place in Sri Lanka's agricultural sector over the past 2 decades. According to the report, the new policy framework was developed with the support of local experts and industry knowledge. Let's take a look at this week's Treasury-bill auction results. Looking at this week's government securities market, the Treasury-bill auction held on July 15th met with strong demand, securing a full 120 billion rupee acceptance. Yields continued to soften across all three tenors. The benchmark 91-day yield led the decline, shredding 8 basis points to settle at 10.13%. The 182-day yield ticked down by 3 basis points to 10.27%, while the 1-year paper eased by a marginal 1 basis point, closing at 10.20%. Thank you for watching. We'll be back next week.